So trade recap. We're going to recap what happened in the day, then going to go recap the trades. So to start off on the day, I was just recording a take, ended up not liking it, so I ended it. On the weekly, actually, let's start off on the weekly because it went to the daily. Start off on the weekly. Why we are currently bullish. Price action came down on Monday, retraced into this weekly imbalance, which we played shorts into. Tuesday, no trades. Price ended up pushing to the upside. Didn't see any setup there. However, today we were still within daily equilibrium, had just rejected off of it. On the 4-hour, we see what happened yesterday, or on Monday, price action came down, swept this liquidity. Tuesday, 4-hour change of character to the upside, or market structure shift. Today, you see this 4-hour imbalance right here. Price action ended up forming, retracing into. The reason why I'm not drawing it out is because it's already drawn out, and I want to save those drawings for the actual trade. So right here, price action came down, retraced into it, pushed to the upside. So overall, our bias was bullish to the upside. We knew this going into the market. If I just go here, view in notebook, I didn't type it out here, but you can see these were our images. Bam, this is price action developing. But now, before I go to these images, we'll actually go to the 1 hour. 1 hour, however, I thought there would be possible potential in order to possibly see a lower retracement within that H4 fair value gap. Although we were already within it, we really did not need to see this. I took note of that and I knew that going into it, so I split my risk in half. On this trade originally, I was thinking of putting my max risk on the day, which was around $800 on the demo account. However, I thought for a second, and I'm like, you know what? We are overall bullish. This is a counter trend trade. Let's split the risk in half. If this can draw toward our sell side liquidity real quick, sweep it out, then push back to the upside, then that would be a double whammy. Bam, shorts to the downside and longs to the upside. Or in the worst case scenario, which what happened, shorts to the downside, stopped out, longs to the upside. So, which we actually didn't get filled in our longs. I'll explain that later. So price action came up. Upon market open, it appeared to have swept out this hourly high right here. Price action came up, swept out that high on the 15-minute time frame. 15-minute time frame. If I come down, I'll show you guys too. Price action came up, swept this out. Then on the 5-minute, showcase a market structure shift to the downside, which we did end up making that push to the downside. But now I want to see if you guys noticed what I did not mention. On both the 5 and the 15-minute, guess what we failed to do? We failed to displace lower. This is what got me. Everything about our trade execution with the shorts was perfect. It was amazing. Besides missing this one thing. This one thing I found, and I'll probably make a video on it today because I've been procrastinating the video. Well, not procrastinating, I just haven't made the video. Which is me going in and fully dissecting my trade strategy and seeing what works and what doesn't. It's mainly for me, but who knows, for the people that watch it, they may be able to take something away from it. Because this single confluence has revolutionized my trading. Although it's only been a past, few days in back testing, it has revolutionized my trade executions on how I spot fake outs and when I know to fully execute, and without just getting liquidated as soon as I execute. The displacement, the momentum at which price action changes character, that to me, the momentum and strength at which price action changes character, that to me is my biggest confluence when looking to enter into a trading position, because I've had a lot of times where this happens or price action slightly closes below and then reverses my entire bias, or doesn't reverse my entire bias and I just simply get stopped out before price action follows overall bias, aka fake outs, stop hunts, liquidity sweeps, call it whatever you want, right? So price action failed to displace lower, which I did not end up noticing because I was so focused on the micro time frames like the 5-minute and the 1-minute that I ended up missing it. On the 5-minute right here, I'll replay back to our short entry. We did acknowledge that price action failed to displace lower, but by the time we already acknowledged it, price action had already started to make the retracement for our trade entry, and we liked what we seen. So we were like, you know what? I like shorts. If we do have the potential to push the sell side liquidity, or at least external or low hanging fruit, whatever, this would be a very, very, very nice play. And so that's exactly what we did. But like I said, overall, we still knew we were bullish on the day. We still knew we were looking to go to the upside. So I guess you could say our bias was market open bearish, overall trend bullish, or overall daily bias bullish. Let me unhide all of my drawings. So right here, I wrote it down. During that, I did not have a time lapse, but I wrote failure to displace low on the 5-minute. However, micro time frame market structure shift to the downside. So I was still acknowledging that we are bearish, but I also mentioned that we failed to displace lower, showcasing we don't really have reason to continue lower as of right now until we start displacing below this 5-minute and 15-minute low, which we just failed to do. Now, how do we get our trade execution in? Price action came back up and retraced, validating this 5-minute imbalance, bearish. Now you see it says inverse. This eventually became an inverse for value gap. Inverse for value gaps also helped us with increasing our trade probability and analyzing proper market structure shifts and all that fun stuff goes into displacement. However, we had a 5-minute imbalance here and a 5-minute bearish imbalance as well. Scaling down on the 1-minute time frame, price action came up, had made this retracement, then had a quick sell-off to the downside. If you're trading NQ this morning, you definitely noticed this and seen this. So upon that sell-off, ended up forming a 1-minute imbalance. Wanted to see our trade entry on the equilibrium of that imbalance. We're looking to target, and I know this is over excessive. This was our final target. We knew this was the least probable. We had more draws liquidity down here, and here, but with our final target being a possible potential 1 to 3.81 risk reward, with our shortest being 1 to 2.2. So I wanted to see a quick move to the downside before pushing back to the upside. Basically, I wanted to see us tap and dip into that 4-hour imbalance one more time before making that push to the upside. However, we did not. Price action ended up giving us our retracement, started validating it actually, showcased some possible potential to continue to the downside. However, during this fun time of price action validating this 1-minute imbalance, I said, if we do not displace lower, this obviously will be validated and will fail to form the bearish inverse for value gap that I want to see. What I wanted to see was price action do this. I wanted to see price action bam, bam, bam. And then let's say we displace lower, retrace for the inverse, and then continue to our first draw on liquidity. That's what I wanted to see. But obviously price action did not do that. Instead, funny enough, this was us actually sweeping out equal lows that we had formed, making that push now to the upside. This was a messier, start of the push. Obviously, if I would have noticed, with price action having been cleaner, if it was cleaner, because all of these wicks and rejections, of course, do showcase bullish confluence. However, this is nothing I would execute upon. But with that being said, price action ended up pushing to the upside. Even here, sure, we had a market structure shift to the upside, still nothing to execute upon. Upon us displacing below this and failing to validate the bearish 1-minute imbalance, the inverse, I knew we were bullish right upon here. But I do not manually close my trades, so I allow my trades to play out to see how validating my stop loss is. If you manually close your trades, unless you have a proven back-tested strategy behind it, knowing exactly when to manually close your trades, where you are placing your stop loss, you should always allow it to either hit your stop loss or hit your take profit. Because if you're placing a validating stop loss, that means if you get stopped out, you did something wrong, right? Meaning you should allow your trades to fully play out and see, okay, does your edge work within this current market, or do you need to go in and do a little bit more back testing and see what works and what doesn't, right? So with all that being said, price action ended up stopping us out. Obviously, we already knew we were bullish here, but this is when we started to look for long entries to the upside. We were targeting buy side liquidity, which we did have marked out here on the hourly time frame, right up here and here and here. We had 3 draws in liquidity, this being our main draw on the day. On the 1 minute time frame, we started pushing back to the upside. However, we were not forming any imbalances. We did have an inverse right here. Did not end up making the retracement for it. Price action continued to the upside on the 5 minute, also having no confluence of showcasing any fair value gap retracements. So we just called it a day. Looked at the 15 minute for a possible last minute trade entry. Noticed 15 did have an imbalance. I wanted to see that retracement. However, we acknowledge right here, this would be a 0.3% retracement in order to validate and give us our entry. With how price action was pushing to the upside, we would have not wanted to see that. That would be more than a market structure shift back to the downside. So in confluence, we knew we're not getting this retracement. That is when we found and we're looking for one last retracement, which was right here on this 5 minute imbalance. Now let's talk about this. How long is this video? Let's talk about this. Why did I not execute on this 5 minute imbalance in turn with 1 minute changing market structure back to the upside, validating this bullish confluence? Let me explain why. On the 15 minute, yes, this also was a trade retracement. I was no longer looking for this trade position, but instead looking to validate this imbalance. But the reason why I did not is because if I would have wanted to get this trade entry, which was still a solid entry for some people, you know, depending how you trade, for me, it wasn't. Primarily because I would have to place, in order for this to be valid, I would have to place my stop loss. I'd probably have to have around, a 55 point stop, or even lower at the most recent micro time frame, the 1 minute liquidity sweep, change of character to the upside in order to give me the proper confluence that I have a validating stop loss. Remember, it's not wrong to look for an adjusted trade position, but what is wrong is forcing it, knowing you're breaking your rules. I knew if I would have executed upon this and would have gotten stopped out, I would have sat there and been like, okay, shoot, well, I broke my rules. I knew I shouldn't have done that. Let me go in and avoid that next time. But it would be pointless because I had already made the mistake before. Remember, our goals is to learn from our mistakes and not take the same mistakes. Don't take the same mistakes. You know, and if you do, emphasize on putting the proper systems in place in order to not replicate those mistakes, right? That's the whole point of learning. Because if you're not, you're just spinning in circles. So right here on the micro time frames, I did see all of this. We ended up validating. I already said right here. Right here, canceled my 15-minute limit. Wanted to see an increase in risk reward based upon what the 1 minute time frame does. This was a beautiful, beautiful setup to the upside on the 1 minute, acknowledging everything. Price action came down, took out this strong displacement to the upside, showcasing we are bearish. I waited and I waited and I waited, and then we got too close toward our end of day draw on liquidity, where then we eventually smacked through it, continuing to the upside for the day. So we did have our potential limit ready. We were about to go in with around 5 micros. Around 5 micros. How many points is this? I lied. 8 micros. We're about to go in with around 8 micros here, but price action did not give us our trade entry. That's unfortunate, but that's just the name of the game. You know, charges of the game. That happens. Price action sometimes just does not give you the exact entry you want to see, and that's okay. As long as you follow within what you know is your trading strategy, that on the day is a green day. As long as you continue to execute on what you know is profitable. If you have a proven, back-tested, profitable trade strategy and you are not executing upon it due to emotion, it is not the strategy's fault, it is your fault. It is because you lack the mental discipline and the mental clarity at the moment in order to see and understand how to properly execute on your strategy. right? And that's what we don't want. We want to remove that psychological barrier as much as we can, because we can't fully remove it, we're human. But we want to remove it as much as we can to get to the point to where we can allow our trading system and our edge to play in our favor. Even if we do get stopped out, not go on tilt and try to remake our losses. So it all depends on perspective and how you see this game. Because for me, sure, of course, P&L also does showcase how profitable your trade strategy is, but don't confuse your weak P&L and overlook your monthly P&L or yearly P&L with the progress you see on your trade strategy. For example, for me, I was overlooking very, very recently my current P&L for the past, of September. I was looking at all of these losing trades, and I was like, wow, I can't believe, I'm doing this bad in trading, when in the past 6 months, I went and plugged all of my journaling data in the past 6 months, just from April, not starting from over a year and a half ago, into TradeZella, and I noticed simply on simply on demo accounts, I've gained an overall profit of $63,000. And obviously I had a total losses of 23, but realized P&L 40K. And you don't see that in the moment, but when you zoom out and see the big picture, you're able to get a gauge and see like, okay, this works, this doesn't. But let me focus on continuing to follow my rules, because that's what builds this consistency right here. That's what builds it. Continuing to stick to your rules, continuing to follow your rules, and continuing to stay disciplined to what you know you should do. That's our emphasis. That's all it is. It's as simple as that, but it's so difficult to do. And I'm going to break my rules at times. You're going to break your rules at times. You're going to over risk. I'm going to over risk. I'm going to over leverage. You're going to over leverage. Or I'm going to blow an account. You're going to blow an account. It's part of the game. But remember, always have that emphasis of focusing on doing and emphasizing the right daily habits every single day. You do that, in the end, you will win. You will win. So thank you all for tuning into this trade recap mini lesson. And I will see you guys in the next one. Depending when we get a trade setup, we have CPI, PPI, and I have no idea what for the rest of the week, FOMC. But yeah.